presented some good opportunities over the last few days. So certainly last week, catching the move to the downside for 325 points, this final breakdown in price, which we've been discussing for a while now on our weekly FX Street reports here. We've been looking for a breakdown in price, which is what we got last week. We caught that breakdown. We've exited the long position. And in fact, short term, we have actually reversed position and we've gone for a long, but we're not looking to stay in this position for a big duration of time right now. It's a very short-term trade, taking advantage of retracement. In fact, the first level we were anticipating the crude oil to hit has already been hit here, which is at the daily highs around 50 US dollars per barrel. You can see immediately we've come into some resistance here, formed a rejection candle. If we close like that today, if we close with an inverse hammer here, we'll bank the rest of our profits on this trade. But if it closes with a positive close, if it closes above yesterday's high and we close with some sort of a hammer or a doji on the daily chart, and it looks like we are going to get a V-shaped reversal pattern in the short term here, we'll maintain the short-term buy here. We're looking just to trade it back towards the levels where it broke down from previously in order to trade that for a retracement, and then we might be looking to then reverse position and then go short again, taking oil lower. Now, in fact, if we go over to the weekly chart, this is where oil gets a bit interesting at the moment, because what we've essentially seen, if you go over to the weekly chart and bring on your trend channels, this is a little bit subjective in terms of the trend channels here, but overall try and link up as many of the closes and also the spike lows as possible here as well. And you will see here where we've got a parallel trend channel. We've come all the way back down to revisit the lower end of the trend channel on a weekly basis. We're finding support where you would expect to get supported on a weekly basis. And if we close the week with a rejection candle, similar to what we saw going back to July last year, it does actually have the potential to then rally back towards the upper end of this trend channel here. Okay, so I'll be looking for the potential on a weekly closing basis. If we close like this or slightly stronger with a hammer, and then if we breach above the weekly highs here, we could see a rotation higher again here for oil. So I'm being a bit flexible with oil right now in terms of the next stage of this move, because from a seasonal point of view, typically as we go towards the end of March and April, if you go back to the last 5 years in particular of oil seasonality, this is not a bearish time of year. Although throughout this year we have played out with seasonality, it has played out very well over January and February and March so far. But going back to the tail end of last year with the OPEC meeting, we have seen essentially oil not follow its usual seasonality over November and December of 2016, which is where we normally see oil break down in price as opposed to breaking down. It went up over 10% after the OPEC announcement where they agreed to go ahead with output cuts, and we saw a 15% move within 1 week after that announcement at the end of November, beginning of December, which was the move here to the upside, which is unusual for oil to do that at the end of the year from a seasonal point of view, but obviously fundamentals trumped seasonality at that point in time. But where we are right now, I would say oil is at a decision point. Now, from most of the positions which I'm aware of being in the market right now, is that it does tend to be slanted to the downside at this point in time. Now that we have cracked through a very important layer of support, now that we've broken down considerably, the overall formation here on the chart is in favor of the bears here. The bears are in control of oil at the moment, but at the same time there are short-term opportunities, retracements to take advantage of, particularly as we formed a bear trap earlier on in the week where we broke down in price, came down to 300-day moving average, reversed into the close, follow through yesterday after the FOMC statement. Now today is decision time. So if we do close with an inverse hammer on the daily chart, then yes, we could see oil have another surge lower here. But if it closes with a higher high, higher low and higher close, we could see a continuation and essentially a V-shaped reversal pattern. So very interested in oil to see really which way it's going to play out over the course of today, and also on a weekly closing basis as well. I'm watching these levels very closely too. So definitely keep that on your radar. Bye.